Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the Morning Market Prep video for August 22nd, 2024. Well, I hope everyone had a good afternoon and a good evening, ready for another day of, well, bullishness is all we can say. We're just straight up running to the upside here in the market. Let's take a look at what's happening overnight. Asian markets last night mostly higher. Good results almost across the board, with only Shanghai down just slightly by $7.81. But Hong Kong, the tech heavy sector over there, really strong, up 1.44%. And the Nikkei also had another good rise with 0.68% move to the upside. Everything else rather modest. If we take a look at European markets this morning, they are also looking bullish this morning. Obviously, tremendous attention is being drawn to Jerome Powell's Friday comments after that major jobs revision of 818,000. Interestingly enough, when that many jobs just evaporate, we had very little market reaction to it because everyone assumes now that provides the FOMC cover to cut rates. However, they're not really thinking about the ramifications of the weakening economy with that many jobs being eliminated. They weren't real in the beginning. Would kind of suggest we have overpriced this market, but no one seems to be worried about that. They're only worried about that Fed rate cut at the moment. And right now we're seeing green across the board in Europe, with the DAX up 0.33, FTSE up 0.19, and the CAC up 0.28. U.S. futures are also trying to push through. They were negative a little bit overnight last night, but have pushed back up into the green for this morning. So modest increases, up 0.08% in the Dow, 0.12 in the SPY, and 0.20 in the NASDAQ this morning. So if we take a look at other things here this morning, we're going to be wanting to watch oil. Oil's been fluctuating around here quite a bit. If we look at our oil producers, it kind of a rough reaction to price resistance and trend there in the chart, pushing back. And yesterday we saw a little bit more pressure on that to the downside, with some of that data coming out of China really suggesting that their economy is weakening even further. We take a look at oil this morning, however, and it is trying to pop up just a little bit. We've got oil up 21 cents at 72.14 a barrel. Brent being up 34 cents at 76.39 a barrel. If we take a look at natural gas here this morning, natural gas, well, a little bit lower here, still trying to hold in that inverted head and shoulders pattern and resting in this consolidation here, but right now we're only down about a penny here in natural gas numbers here this morning. If we take a look at our precious metals market, boy, GLD holding in there pretty strong, but just a little bit lower here this morning. We're continuing to kind of rest after making those new record highs. Right now, gold futures are down $4.40 an ounce. Seeing silver is still trying to push up ever so slightly here this morning in that nice little run, and now consolidating in here. But I'm seeing copper, palladium, or platinum down, and palladium, which had a really good pop-up yesterday and pullback, but still held a higher print, trying to move a little bit higher this morning as well in palladium. If we take a look at crypto's been incredibly volatile, whipping around here quite a bit. Ended up with a good day yesterday. Bitcoin this morning up $70 a coin at the moment. And we're seeing quite a mix in those cryptos this morning, a little bit of back and forth. And I think one of the reasons we're seeing that is just all this uncertainty here in the market on these currencies as they fluctuate around. If we take a look at our US dollar, UUP, well, a lot of weakness in here on that US dollar and continuing to show weakness after breaking that trend in here. And one of the reasons that's occurring is we're seeing our bonds continuing to really highly anticipate those rate cuts from the Fed in September, really pricing them in already. The 2-year bonds are at 3.96%. The 10-year is at 3.83%. In the 30-year is at 4.10. As we continue that bond inversion here in the market, that is the longest bond inversion in history. But even the 3-month bonds are pulling back. They are now at 5.14%. So really a lot of confidence that rates will be cut now in September. If we were to, well, I guess that's the majority of the data here this morning. So how about we settle in? Let's buckle up. Let's get ready for the Thursday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I very much appreciate it. Let's take a look at these charts and see if we can figure out how we might want to approach the market for today. Remember, everyone, we want to look at these charts without a bias. We want to look at them as what they are, not for what we want them to be. Well, what they are currently at the moment is extremely bullish and continuing to stretch to the upside. You know, typically we don't see markets run to such an extreme. And when I say extreme, we have the S&P 500 and the QQQ now 9 days straight, and 9 days out of 10 to the upside. So pretty remarkable move to the upside as we continue to squeeze. And if we look here at the diamonds, you can see we're very, very close to testing this resistance high in the chart. So if the bulls can find that inspiration today, and I'm kind of thinking today could end up being a hurry up and wait day, and I'll explain that in a little bit. But if we can break through that resistance here in the chart, well, then our next move is probably up here to test all-time highs in the Dow. And it's hard to believe that we got all dressed up here and get this close and don't make an attempt to break out and hit those record highs. Now, I will tell you that I don't think that's a very healthy move for the market, and the reason I say that is because we're so extended in the short term. We could peak up there, we could catch that new record high, and then I'd be looking for a pullback to occur in the market here at any time. Pretty extended in the short term. If the bears, however, were to find inspiration, well, pretty easy to see here. We could push back down, try to catch that little bit of support. And of course, that upside trend in here that we've broken back through. So if that were to hold, we're in great shape for that attempt to reach up here to all-time highs. If that were to break, that might raise a little bit of concern, and we'd start moving down progressively through these areas here. And remembering, we still have this big gap in here. So if we were to stumble in the market, there's a big gap there in all of the indexes that could tug pretty heavily on the indexes. So remember, when we extend, oftentimes the pullback can be a little bit rough. So watch carefully for that possibility. If we take a look at our SPY, SPY, very, very strong here. Again, like I say, only 1 day in 10 that we had any kind of a pullback. We tried to pull back yesterday a little bit after that big revision in jobs, but then everybody thought, well, wait a minute, that probably means the Fed's going to cut rates, and so we're going to party. And the party continued. We pushed up here and filled that gap. Next step would be pushing right on up for all-time highs here in the chart. Sorry, this changed tools on me here. Let me fix that really quickly. So every reason to believe that we could stretch up there and grab those all-time highs here in SPY. And of course, the corporate buybacks have been a big part of this move. After earnings out of that blackout period, the corporate buybacks this quarter are huge, and they're helping push this market back up. So watch that carefully here. Every reason to believe we can pop on through there. Now, if the bears were to find inspiration, well, there's a little bit of price support right here, as you can see. Might catch that area, and then we might start coming back through some of these progressive areas of price support in the chart. Just keeping in mind, as we push back down this extreme move to the upside, we still have this big gap in here as well. So if the bears were to really come in with some kind of inspiration, the pullback here could be substantial. And we want to remember that we're really extending away from our moving averages as well. We went from extreme to the downside, now extreme to the upside. Same thing with the QQQ, very extreme in this stretch move. Again, 9 days out of 10 to the upside, and you can see our next resistance here in the chart would be right in that area. If those bulls can push on through there, then we'd look to fill this gap up here. Slide right on through into that gap, and then we'd start progressing on up to see if we can reach out for all-time highs here in the NASDAQ. If the bears were to find inspiration, well, that's not too difficult to see either. Maybe holding on to this trend, and if that doesn't hold, probably pushing down into this little area of price support, and then of course we would start moving back down toward that potential gap here in the chart. We've got it on all of our indexes here, that big substantial gap. And again, a little pullback to the 50-day moving average would not be out of the question after such a big run to the upside. And then if we take a look at our IWM had a good day yesterday, pushing through, in fact, the strongest of the indexes yesterday, pushing on up. We'll want to keep an eye on that. We haven't been able to quite break through that big black candle that started this mess. So watch that carefully. If the bulls can find inspiration, maybe breaking through that resistance, and then we push on up in here. And you can see there's multiple levels up here that could, hang us up just a little bit as we push back up toward those highs that we saw last month. So watch that closely. Now, if the bears were to find inspiration in here, well, I'm seeing a little bit of support area right in here that could easily hold us in that chart. But if they were to break that down, then I would start moving us back down toward this area of this big area support. Remember, this line here goes all the way back to 2021 and 2022 support areas. A failure there coming into this upside trend is where I'd be looking, and we would fill that gap here in the chart. If we take a look at our VIX popped up a little bit yesterday. That little bit of fear came up in that chart. I don't know that it wasn't enough to be any concern, even though we had quite a few jobs just evaporate from that weren't ever there. We popped up there and we tested that downtrend, but then ended up with that bullish move back up at the end of the day, saying, we don't care. We know the Fed's going to cut rates now, and we're going to party. And so watch that carefully. We also have this resistance here in the chart that did a good job of helping hold that down. So if the bulls can find inspiration today, let's look for that push back down here to see if we can retest this area. And if that were to break, well, then I think we're coming on back down here. Now, I will say with what we're seeing in all of these warnings from retailers and things like that of a slowing economy, I think we're getting very, very complacent here. But we can remain complacent for a long time. We're really excited about a rate cut. Although if you look back in history, when the Fed usually starts cutting rates, it's because there's something wrong with the economy, and we enjoy a little bit of a brief rally before we start to sell back off. So just be careful here. We're pretty excited for this potential rate cut in the market, and we're going to find out about that on Friday. Now, if the bears were to find inspiration, well, once again, I'm going to use this level here and that downtrend that I'd marked before. Popping through there could raise a little bit of concern in the market. And you'll notice there's a little gap right there. Maybe we can move up and fill that gap, and then we'd start pressing up in through these areas of the chart. But I don't see that as becoming a major issue with Friday and the huge anticipation of the Powell speech on Friday from Jackson Hole. Let's take a look at our T2122, the 4-week new high, new low ratio. And as you can see yesterday, we spent a good part of the day up here in the bearish reversal zone. We pulled back there for a period of time with that jobs number, and then right back up here in that reversal zone. So we do have some upside potential, and this morning our gap up that we're going to see here in the market likely push us right up here into the nosebleed area of T2122. So that revisit up here, and we could just linger up here because it's going to be a hurry up and wait day, I think, with a lot of choppiness, waiting for what Jerome Powell's going to say about the economy on Friday. And, I don't think there's going to be a whole lot of surprise. Jerome Powell's probably going to lean into the idea that maybe September, as long as the data supports it. And he says pretty much the same thing every time. But the market chooses to hear what it wants to hear, and it just wants a rate cut. So look for that bullishness maybe even to extend into Friday. But if we find any reason for bearishness here in the market, well, we've opened up a big opportunity for a pullback. So just be prepared. If we stumble in any place, I would be, again, continuing to raise those stop losses, protect yourself in the market right now, because if it does reverse, I'm afraid it could reverse pretty harshly. So watch that. Watch carefully for that. Make sure you're planning to protect yourself. And I would really try to avoid chasing stocks that are already up multiple days in a row and really extending out. Be very, very careful with doing that. If we take a look at our T2108, our T2108 had a good day yesterday as well, pushing back up. It didn't quite break out of that prior high, but we came up there and took a hard look at it. We got about 56.5% of the stocks above their 40-day moving average, so the bulls are definitely in control. And you can see that we've got some resistance levels up here that we will have to pay attention to, and we've got good support levels below if the bears were to find any inspiration. I don't think the market would get too worried about things unless we dropped maybe back below that 50% area here in T2108, but we'll have to wait and see. Right now, we're so hyper-focused on rate cut. That's about all that matters in the market. If we take a look at our T2107, T2107 did make a nice move up there, pushing through resistance of that prior high. 56, almost 57% of the stocks above their 200-day. That's a nice improvement. We are coming into a fairly strong area of price resistance here, so keep an eye on that as we push up. And if the bears were to find inspiration, we certainly have some good support areas in here. And we're well above that 50% area here, so we've got plenty of room to move and still hold on to that bearish or bullish sentiment. If we take a look at our T2101, well, even though our volumes have been incredibly low, our T2101 is still extending up as those corporate buybacks continue. And you can see pushing us up here into some of these lofty areas of T2101. And once again, kind of extended in the short term. But we'll just have to wait for that pullback to show itself. And then just be prepared, because it could pull back pretty substantially. If we take a look, and I say could because I don't know, if we take a look at our economic calendar here for today. Well, here's some of the reasons that we could have some things moving around here on us today. First off, whoops, where is my calendar? Just a sec. Sorry about that. I had to pause the video and go get the calendar. I had inadvertently closed it. So today, obviously, we're in the midst of the Jackson Hole Symposium. Expect lots of talking heads out there to be coming through the news cycle. But you'll want to be paying attention to this morning. We've got jobless claims. Now, it'll be interesting after such a major revision. Are they going to change the way they count this? Or are they going to continue to overcount jobs? We'll want to watch this carefully. But I'm expecting 234,000 here this morning on the consensus, so keep an eye on that. Chicago Fed National Activity, they're looking at that to decline to a negative 0.15 down from a 0.05 positive last time, so keep an eye on that. Again, slowing economy. PMI composite flash, they're looking for that PMI to come down to 53.3. That's a little bit lower than the 55 last print. You can see manufacturing index, they're looking for that to decline. No, they're not. They're looking for that to stay flat, exactly flat. And then services index coming down just one tick to 54 from 55. If we take a look at our existing home sales, remember this one, they missed big time last time on this. Kind of a surprise move, and it did have a short-term negative effect on the market. They're looking for 3.9 million here, a little bit of an increase over that big miss last time, so keep an eye on that number today. And then we've got a natural gas report, bunch of bond auction announcements. Kansas City Fed Manufacturing will be in there at 11 o'clock. We've got some bill auctions, and then of course a 30-year TIPS that might be interesting to pay attention to, along with the Fed balance sheet. Looking into Friday, remember that's when we're going to get Jerome Powell's speech. It's going to be the big important thing. So after we get through the data today, don't be surprised if it's really choppy and very low volume as we wait. The whole world seems to be waiting for what he has to say on Friday. We've got new home sales that will be coming in and a Baker Hughes rig count as well. Let's take a look at our earnings calendar for today. In our earnings calendar, we got a few more on here today to be concerned about. I'll run through them really quickly. We've got AAP I've got on the list here this morning, so you'll want to be keeping an eye on that. Looks like Advance Auto is moving a bit. Whoops, that went to a 2-day. Moving a bit lower here this morning, so keep an eye on that. BILI will be there, if I can get the right symbol. Moving up just a little bit here this morning. BJ will be reporting today. We've got CSIQ. We've got LANC. Peloton is in there this morning and moving higher. We've got Toronto Bank moving lower. VIK will be in here this morning, and the WB will be reporting. If we take a look at this afternoon's reports, probably our most notable is going to be Intuit. Intuit will be reporting this afternoon, so keep an eye on that. Along with that, we'll have ALC. We've got BILL that will be in there, CAVA, and we're going to hear from Roast and WDay. So keep an eye on those reports this afternoon. Let's take a peek at some stocks that could be setting up for today. But before we do that, everyone, if you can do me that quick favor, if this is the first time you've seen these videos, please click that subscribe button on YouTube and also click that bell icon when it pops up so you'll be notified every time I post a video. And thanks so much to everyone out there who takes the link for these videos and shares them on their social media feed. Truly appreciate that. It helps helps us reach out to more people, and truly very, very kind of you, and I truly appreciate it. And thank you to everyone who continues to support the channel through the Buy Me a Coffee link as well. You guys are truly awesome. If you could click that thumbs up button and leave a brief comment, I would truly appreciate that. And if there's questions or anything that I can help you with, please feel free to put that in that comment section. I do my best to try to answer those all. So thank you, everyone, for those who take the time to do that. It really is that response to the video that helps the YouTube algorithm show these videos to more folks. So thank you, everyone. Let's take a look at some of these stocks that could be setting up. And remember, these are not recommendations to buy or sell any security. You need to do your own due diligence. Be very, very careful in this market, and realizing that we're pretty extended here in the short term. A little rest, a little consolidation might be due us really soon. But that being said, there's quite a few stocks to pay attention to that are looking quite bullish. So let's take a look at those and follow your due diligence, follow your rules and your guidelines. Never blindly follow anyone else's trade ideas. I'm going to start in a little different place than I have here for a while. Take a look at CMI now. I don't exactly know what this big print, this big pop is showing me here this morning. I think that's a bad tick that'll probably be corrected here this morning. But take a look at this nice little tight consolidation in here. I actually placed a price alert here on that chart right there. And this beautiful little tight consolidation in this upside trend after breaking through up here, I would say CMI has that potential for that upside move coming here soon. You could also look to the Deere, John Deere, also showing a nice little resting consolidation after breaking through some resistance. Now clearly it has a lot more work to do with the big resistance up here to try and address. But that is setting up here for that next upside opportunity potential. So watch carefully there for John Deere. Taking a look at Boeing now. Boeing's still very, very volatile and still has a lot of problems to work through. They've got a trust issue now in the market, and pushing up here, as you can see, we came up into that resistance and we're pulling back. But the good news is at the moment is that pullback is holding a potential higher low in here. So I would watch for that next, if you want to be in Boeing, watch for that next opportunity in here for that to show those bulls really stepping up. That may resume an upside trend here in the chart. We can start working progressively through those areas in the chart. Be kind of careful, don't chase, but watch that carefully. Another one that I took note of here yesterday was Disney. Disney breaking through that downtrend. Here again, still questionable because we haven't made officially that higher low here yet. But you can see I placed a price alert on this chart, this cross up of that downtrend, something I'm always looking for, and then that resting pattern in here, waiting to see when that upside trend can be resumed. So watching this one for that potential trade. It's looking pretty good overall. Take a look at Spotify. You guys know I did the exact same thing here, looking for that resting consolidation, and then we pop and we're trying to hold up in this area. I would look for that to continue to potentially extend to the upside. So watch that. Take a look at PayPal. PayPal's made this big stretching move here through this downtrend here in the chart. Now I wouldn't want to chase this. We broke the downtrend, we broke through resistance in the chart. Now any rest, any consolidating rest, pull back in here. If we could come back here around trend and support somewhere in there, I would be looking for possibly an opportunity in PayPal, and it might even be a longer term type of position. You can see this is the weekly And this could be a finishing of the big bottoming pattern in here that's taken months to complete. And there may be some upside potential then coming in PayPal. Keep a close eye on that. Take a look at some of those defensive sector stocks. They continue to hold in there and look pretty good. Mondelez is looking good. If you take a look at Altria and Philip Morris, they're still looking good. Coke still moving to the upside. Now, they're not moving fast. But the nice thing about these companies is when they do move like this, just nice steady growth coming into the charts, not real volatile, just squeezing themselves here to the upside. So keep an eye on those. There's still quite a few looking really good. Take a look at Clorox. Clorox made this big popping move here recently, breaking through resistance. Now, any rest consolidation pullback in here to find that trend, hold on in here. I would be looking for that next opportunity there in some of those old boring companies. And then you got to be continuing to look at these utilities showing strength. NEE continues to move up nicely here in the chart. Take a look at Southern Company, looking good and potentially ready to pop out of this consolidation. So keep an eye on those. XLU showing us that bullishness, and you can just drop into that sector and you can find lots of bullishness in that sector. And the same thing would be true with our consumer staples. XLP, look at that run here in XLP. That's where I'd alerted on that chart. Ran through quite a bit of volatility there before taking off, but looking really strong. Needs a rest or pullback now. But I would be watching for that next opportunity in here as we continue to see those consumer stocks really pick up. So with that, everyone, I want to wish you all a fantastic day. Thanks for being here this morning. I truly appreciate it. And as always, I wish you all of the best and hope you have a productive and profitable day. Take care, everyone.